What stops this deal from happening from here? 1 out of every 3 beers sold worldwide under a single company. If this was any other industry, the regulator would be having a look at this. What stops this deal from happening?
I think the deal's going to come under very heavy takeover scrutiny, but what's interesting to note is that really, geographically, these brews are quite diametrically opposed, so that means there are very few regions in the world that will come under extremely close scrutiny. So those include, for example, the US, where AB owns a joint venture with Molson Coors called Miller Coors. Now, I think a number of analysts expect the stake in Miller Coors to be sold straight to Molson Coors, and that to a certain extent has already been priced in. Then in China also, SABMiller has a joint venture with China Resources, operating the brand CR Snow, and that's expected to also either be sold to the Chinese government, to an external third party, or maybe there's an agreement whereby ABI can retain it.
Thomas, I want to take it to Steve's world. How are they funding this? How much debt is going to be used to fund this deal?
Well, look, I think that we broke the story early on that ABI had a debt capacity of 70 billion, but I'll take it over to Steve in terms of what that means to the debt markets.
Throw in Dow and EMC, it's 2 mega deals and about $120 billion of debt potentially, Steve. Is there a story there?
Well, in general, there's a lot of supply coming in credit markets. Maybe there was a bit of a lull during summer, so some of this is pent-up supply that's coming through. The problem in credit is that spreads don't need to widen because someone's actually selling bonds they already own. It could be a new issue. So these are huge numbers by any standard, and so the market has to accommodate this kind of size very quickly. And if the risk appetite isn't there because the more systematic factors are changing, so you have a risk off, for example, rather than risk on, then who's going to buy the bonds? So, I mean, obviously it will get placed, but the question is at what price? And maybe the spread today is wider than it was a few months ago. I mean, I don't know.
Well, the discussion is that this could be front-loading, getting a deal over the line before the Fed starts tightening, whatever that rate path looks like. Get it done before spreads start blowing out. The facts are spreads already blew out through the summer. As you see it, capacity, yes, there always will be, but will there be demand to get this away at a decent price?
You see, again, in general, not about this deal in particular, but in general, that the role of the corporate is to try and term out debt whilst they can. So if you genuinely believe that rates are going to go up, then issue now. I don't believe rates are going up, so I wouldn't issue anyway.